The DAX had a huge bull bar this week, and it's a breakout. It almost reached the all-time high, but it failed to reach the all-time high. When you see a bull bar like this, you're probably going to get something of follow-through. However, bull bars lately on the weekly chart have had bad follow-through. So here you had two bull bars breaking above a bear bar, 4 in total, and could not even get above that bull bar in the next week, and we sold off. Here we had a big bull bar and sellers above, we sold off. Here we had a couple of bull bars and we sold off to a new low. However, this bull bar is different than the ones that I mentioned before. This bull bar actually breaks above stuff to the left. These bull bars didn't break above much to the left. This one only broke above the prior bar and not above the bar before it. And when it got there, it sold off. But this bar broke above prior bars and closed above prior bars. That is a strong bull statement. Whenever you see a breakout, you got to look at a measured move. Most likely measured move is probably that low and that high. If we can get follow through, bulls are looking for a measured move up. That measured move up would lead to about 27,000. The bulls are hoping that this is going to turn into a breakout above these levels and above these levels, and then this low and those highs would be measured move up targets. So here, or even to above the all-time high, all the way into far in the 30,000. That is not likely. I think it's likely that we'll get some bullish follow through and that we get a measured move from that high to that low into the 26,500 and maybe a little bit higher. The most important thing is the follow through. If the follow through is going to be a bear bar, an inside bar, a doji, or a very small bull bar, traders will interpret that as a failed breakout. Here you have a breakout, here you have the follow through. Is that strong follow through? No. Everyone interprets that as a failed breakout. We're probably going to come back down. And so next week is going to be important on the weekly chart. Will we get a bull body? Will we go a lot higher? Will we strongly close above the prior bar? We'll see. Next week, Friday, we will know. Most important thing is that the bears could not trigger the sell signal below last week's low. The low here is 712 and the low of this week was 717. You can see that on the daily chart or on the 5-minute chart of Monday. Let's go to Monday and make it. This is the Monday chart. This is the Friday low. And whenever you have an open on Monday that's a trading range or a bear trend, you should always assume that we're going to test Friday's low. Friday was a bear bar, so a bear bar has a higher chance of being tested below. The weekly chart was a bear bar. Bears were selling for a test of Friday's low. And late in the day, very late in the day, they got to 5 points, but they failed to reach Friday's low. And instead, Tuesday gapped up and started to go sideways to up. And then we ultimately got the rally on Thursday. Monday was a trading range day. You have a bear bar with a big tail, follow through, weak follow through, another big tail, test of Friday's close. So that test has been completed. Then you got a wedge pullback and a second leg down. The strategy on Monday was probably to be buying below prior lows and to be selling above prior highs. Even late in the day when you get something like this and the whole day has been a trading range, you got to assume that the day stays a trading range. So you buy the reversal up. And in trading ranges, you don't hope for 100 or 120 points. You go and take quick profits. So a buy here above this bull bar, you're probably looking at 60 points or maybe 30 points. A sell here above a bear bar or sell above a prior high, you're probably looking at 30 points for a scalp. 60 points is the scalp size on the 15-minute chart, and about 30 points is the scalp size on the 5-minute chart. Tuesday gapped up and you had bull follow through. Whenever I see a big gap up, I look at the first bar. Here you had a gap up and a bear bar. Here you have a gap up and a bull bar. To me, it looks like the gap has been accepted by the market. Bulls are buying the gap. First, I was looking at a measured move from that range, so this low and that high upwards, and we were opening there. But secondly, and very quickly, I was looking at a measured move from that breakout point. So that low, that high. If I measure it exactly, it gets me to 17, and that is 882. It gets me to 25,047. And I had that on the chart whenever I was trading it in the morning. It helped me to not take the sell signals, but I took all of the buys in a trading range. Then, after 2 hours, we reached the measured move, or the moving average, apologies, and we started rallying. A bar like 25 makes the market always in long. This makes the market always in long, but we fail. This does not make the market always in long, but only for the next bar or so. This is such a strong breakout above there, almost above there. You got to look for the buy signal. I don't think buying above 28 was strong, but buying somewhere in here was strong. And we overshot the measured move. We went to the highs on the daily chart at 153 and then sold off back to the measured move, 25,047. All of this was an overshoot of the measured move, and bears were scaling into shorts, expecting a test of the measured move. The day became, by and large, a trading range day, but it had a bull breakout, a big reversal back down, and then a reversal back up. Then on Wednesday, failed breakout above the range and new highs, but new highs constantly getting sold. The day was, by and large, a day just like Monday. Buying below things, selling above things makes most sense, and don't expect big profits. Profits in the range of 60 points, because the daily range was a little bit bigger than on Monday. And then the Thursday rocket. We gapped down and we strongly reversed back up, and we had follow through. Market always in long, but by and large still in the trading range from yesterday. Second leg up, bears are selling for a second leg trap. But instead of the bulls getting trapped, the bears got trapped. We went sideways, and a bear who sold below 6, sold more below 10, could not get out below 6. That is an indication that the market is bullish. The bears are getting trapped, selling below bars and selling below the next bar. Bar 19, again follow through, but not long a lot, right? Maybe you have a spike, maybe you have a channel. Gaps are being closed. But then the middle of the day, this gets really, really strong. 42 to 45 is a huge breakout. And it's a breakout above a spike and channel bull trend. We're probably going to get a measured move the whole range of the day. And there was just no stopping. This took off and took off and took off. There's no selling here unless you're selling out of longs, but you can't short something that's that strong. And whenever you see something that's that strong, targets on the 5-minute chart are way too small. You need bigger targets because the market is going to go a lot higher. So you can look at the 15-minute chart. The 15-minute chart here, this is Thursday, and here you have the breakout. So the first thing you do is you probably look at this as a measuring gap and expect the market to get here. You can by then also look at a measured move and say that we're probably going there. But I would even go to the 60-minute chart. And the 60-minute chart had a breakout here. We have the double top. The double top failed. We broke out. That's the second hour of the day, or the first hour of the day in the regular trading hours. The second hour, the third hour, consecutive bull bars. The low is here. The breakout is there. And the measured move up gets you into here, 700 range. And as soon as we touched the 700 range, started to fall back a little bit, profit taking. And the next day, Friday, opened there and fell back to the same measured move target. So it's a magnet on the hourly chart for at least an undershoot and an overshoot. And we've met both targets. So in a strong, huge bull trend like this, there's only one thing you can do, and that's buy and hold. The day closes at its highest point or very close to the highest point. In this case, we ran, 800 points, and we closed 700 points higher. So buy and hold, buy and hold. Friday, we had 2 hours correction from the big bull trend. So bar 24 was about the low of the day. 2 hours sideways to down. And then rallying to a new high. The bulls managed to create a bull bar follow through on the daily chart. The day opened here and it closed there. So with 50 points, we made a bull bar follow through. Closing off the gaps down here. So right now the market is already in something of a trading range, with this the low and that the high, and probably needs to go a little bit higher. The 26,000 is obviously a strong magnet. as is 20,007, which is the all-time high. So will we go higher and get follow through on the weekly chart? Will we go a lot higher? Or will we be in something of a trading range on the daily chart soon? And will there be sellers above this big bull bar on the weekly chart? We'll know by next Friday. Thanks everyone for watching. Hope you have a great rest of your weekend and see you in the markets on Monday morning.